Oh man, this is an emergency video because Tether USDT is depegging as we speak. You can see here on the chart that we have depegged as far down as 0.995 here on Tether. What does this mean? Should we be panicking? Why is this happening? We're going to break that down and a lot more, guys. First and foremost, as always, in these tumultuous times when Bitcoin is testing critical levels, which we're also going to come on to, you have to protect your funds. Make sure you are diversified across exchanges. Make sure you are diversified across stablecoins. And right now you're seeing Tether facing difficulty here, depegging down here, down as far here as 0.995. It's recovered a little bit here over a short period, but still not out of danger, as you can see by this big daily candlestick here to the downside. If I zoom down here to the hourly chart, you can see how this has been progressing here over the last 4 or 5 hours, starting the depeg at about my time here at 4 a.m. in the morning as I was snoring away. And what we can see here is this is happening on most major exchanges. So the only exchange where we're actually above is on Binance.us, which is very interesting. So not financial advice, but you could technically buy Tether at a discount, right? You could buy it at a 0.34 discount on an exchange like so, which is this one here on Gemini, right? Or any of the others like Coinbase, and you could be selling on Binance.us for a plus 0.17 premium. This is called arbitrage. Now, if we jump on over to find out what is causing this, we can see that it's caused by a bunch of selling on Curve and Uniswap. Again, guys, this should remind you, I'm not trying to create FUD or scare you, but this is the same set of decisions made that led to Terra Luna's collapse. I'm not saying this is going to lead to a collapse of Tether. Tether have done a good job at repegging before, and I'm going to come on to what their CTO said shortly. So I'm not hugely panicked right now. I want to remain calm, but we have to be diligent. We have to be diligent. So this video is for you guys to be diligent, because I know there'll be a percentage of you guys that are all in on USDT, that have most of your capital sat in USDT because it's considered the biggest stable coin, right? But what have we learned last week? The two biggest exchanges, Binance and Coinbase, got attacked. Now we're seeing a bit of a weakness in one of, well, the biggest stablecoin. And what have I always expressed is the Achilles heel of crypto? The Achilles heel of crypto is the monopolistic behavior in the exchange space and the monopolistic situation in the stablecoins. I would love to see more stablecoins competing with USDT. Of course, the US banned Paxos and BUSD, which took out one competitor, right? Now they're trying to take out competitors in the exchanges as well. This is not a good look. So I'm not saying that USDT has done anything wrong, but right now you can see that things are going on the Curve pool. So what you're seeing is millions worth of Tether USD stablecoins appear to be selling off on popular Uniswap and Curve pools. Remember, guys, this is that 3 pool, the same 3 pool that was used for Terra Luna collapse. So what you're seeing is a bunch of people are opting in this tumultuous market to move across into USDC and die. Now think about it, guys. Like, if I'm going to come on, in fact, before I come on to that, let me just show you what the CTO of Tether just said. The CTO of Tether, and I retweeted this, said markets are edgy in these days, so it's easy for attackers to capitalize on this general sentiment, but at Tether, we're ready as always. Let them come, we're ready to redeem any amount. And that's good. That's really good. The best way to fulfill any FUD is to show your one-to-one backed. Prove your one-to-one backed, right? And the reality is, as deep as the bank run goes, like same situation we face when people are running on Binance, as long as you let them withdraw, and in this case for Tether, as long as you give them back their US dollar, $1 every time they want to redeem 1 USDT, give them back their dollar, you should be able to prove yourself fine. The problem is, how deep do these bank runs go? If these bank runs go long enough, eventually you'll find out where their weakness is, because if they weren't one-to-one back, let's say they were, for every dollar they were back 0.75, well, you need to have quite a deep bank run on USDT before you find that weakness of the 25% at the bottom. Okay, so similarly, if they're only, if they're only 50% backed, you'd have to have a 50% bank run before you experience that. So as long as they keep redeeming at the beginning, most times out of 10, it will just kind of repeg. Similar situation to Binance. If they don't have the assets backed and they pause withdrawals and freak out, market's going to freak out even more, the bank run gets worse and worse. But here's the thing. When you're sitting here and you're seeing this as it being an attack, I don't think it's an attack, guys. I could be wrong. I personally don't feel this attack. I mean, Paolo here, the CTO of Tether, likes to come out and tweet that this is just FUD. It's not FUD. There's a depeg going on, and you need to do your best to repeg it, and I'm sure you will repeg it. But you can't just say this is FUD. What you're seeing is investors preferring to be in DAI and USDC. Now think about it. Why would they? What just happened? Well, yesterday we just had our FOMC meeting. What happened after the FOMC meeting? meeting. I gave you guys an update, and Jerome Powell rugged us, right? We were expecting a pause, granted, he gave us a pause, but hidden in there, he said, we're going to have 2 more rate hikes. We're going to keep rate hiking to the end of the year. And markets didn't like that. And that was enough for Bitcoin, which we're going to come on to shortly, to break down from its pattern. I'm going to show you that pattern. But when this broke down, this is now getting markets worried that we could be in for a bigger retracement. This is not a game anymore. This is like a big change in structure from where we're at. I'm going to show you. And therefore, if markets are thinking, hang on, if we could be heading down to 20K, if we could be retesting some of our lows, do I not want to be diversified in stablecoins? And that is where we're starting to see people move some of their USDT into USDC, into DAI. I think that's a good move. You should be diversified in your stablecoins, right? That's how it should be. So let's now jump into the charts. And what I do want to show you here is a very, very important Bitcoin pattern. And this Bitcoin pattern has been forming for a little while. We've been monitoring it. I'm sat here on the 4-hourly chart and we're in this big falling wedge, right? In fact, let me just zoom out to the 4-hourly there. And you can see this nicely, right? This is that falling wedge which we were consolidating in ever since we hit 31K. We hit 31K and successively we couldn't get past 30 thereafter, then 29, and then this point we couldn't even get past 28.5, and the bears controlled the pattern all the way to the downside. Now, critically, we're breaking down from this pattern. If we break down from this pattern completely, you've got a little bit of resistance that comes in from here. A little bit of resistance from 24.2, but other than that, this price target can fall down to where the move started, which was just below 20,000. Remember, we were sitting here at 19,500 before we elevated our way up here, consolidated for a bit, elevated our way again, and then off we went up towards 31. So equally to the downside, when we break down, there's a little bit of support at 24.2, then I'm looking at 20K and 19.5. So there's a lot of pain here to be seen in the charts. And this is why people are starting to say, hang on a second, I need to lock down the hatch here. I need to be ready mentally, my portfolio, my exchanges. I need to be ready for some more pain. It doesn't look like immediately we're ready to run towards 31. Now, of course, just from a pure technical perspective, there is a rationale to argue that this could be a fake out. We could fake to the downside, shake out some of the shorts, which would be really good, and then we can have a powerful move to the upside. I would love to see this, guys. I mean, if we could just have a situation where we went something like, let me just see if I can draw this for you, something like this, and then boom, up to the upside. How beautiful would that be, right? Shake out the shorts to the downside, get everybody excited, and boom, start working our way upwards and break through 31. So I do want to look out for that scenario as well, but you've got to be cautious and prepared for the downside. And if we do head to the downside, I'm ready to nibble. I'm not going to nibble aggressively, because like I've just showed you, from where we're at, there's quite a dramatic fall down to 20,000 if we get this wrong. So I don't want to load all my capital in right now, around 24, 25 kind of range, 24.5 kind of range, and then not have enough left, right? We're now officially below 25,000. So we need to prepare ourselves, because what did I say? I said that when you look at this on the weekly chart, we could hold 25 and we'll be okay. Anything after then is disaster. I'm going to show you what I mean right here. This is the weekly chart, and I'm going to bring out, you have to excuse all the diagrams, but it's going to show you exactly what I mean. That falling wedge, where did it fall to? It fell directly into the EMA ribbon. Now that falling wedge coming into the EMA ribbon, which you can see just there, when that comes down, if it bounced off the EMA ribbon and we broke the wedge to the upside, it would have been a perfect retest. But we're no longer in that territory right now. We are now officially on this weekly candlestick, which we're printing now, flirting with the idea of closing below our EMA ribbon. Bar a really surprise end to this week leading up to Sunday when this candle closes, we will be below this EMA ribbon. And that's going to spell pain, right? Then we have to flip the script. This was no longer than just a retest of the EMA ribbon. We've lost it before the EMA ribbon could flip and expand and move us to the upside, okay? And then we need to be looking for those painful price targets back lower. So USDT depegging, market's looking weak right now. You've got to batten down the hatches. You've got to get yourself mentally prepared for some lower price points. I know I'm going to be ready to DCA, but I'm not going to catch a falling knife. I'm going to be patient. I'm going to ladder in my buys, and I'm going to get ready for 20. I'm not going to panic and say Bitcoin down to 15 or 12 or 10. I'm going to keep it rational. I'm going to follow the data in the charts, and I'm going to get ready for some price targets. Hope you guys enjoy this video as always. Don't forget to smash the likes. Don't forget to subscribe if you want to trade any of these volatilities. If you want to buy even spot and DCA, check out Bybit. Links in the description. That is the platform I'm personally using day-to-day to trade. One of the best out there, most intuitive to use, and you get some amazing bonuses when you deposit. Thanks for watching, guys, and I'll see you in the next one.